Welcome, everyone. Today I'm joined by Arnie Tracy, who is a really incredible member of the Palantir investor community. Arnie has been detailing his research for Palantir, has thousands of investors now on his newsletter, and I'm sure at this point you've probably sent like over 100,000 emails. Arnie, please introduce yourself to those in the audience that are unaware of your work.
I know it sounds so weird, but I had really sent more than 200 emails on Palantir so far. And
Yeah,
I'm
to
sure
thousands.
you can really share a similar number of videos, or actually even more, since I've been
That's
following
right.
you since before the DPO, not after the DPO, but before.
Yeah,
So
yeah.
it's a pleasure to be here. For those of you who don't know me, I'm Arni. I worked as an equity research analyst, and then I wanted to invest my own money because really want to grow as an investor rather than just saying people you should buy, you should sell. I really like the idea of leveraging what I do, what I research to actually make my own decisions and to build my gradual approach of as an investor. And with Palantir in particular, I found not only a company which was extremely hard to understand at first, but that is now gradually shaping my way of investing. A few days ago, I shared I arrived to Palantir thinking I already knew how to invest, but in reality, I really had to learn so many things, change my way of thinking of things in a context which is way less static, way less fixed than a normal company you would assess. With Palantir, everything follows the power law, and the power law domain is everything but linear by definition. And if you are used as an equity analyst to live in an Excel world, which is row and columns, you can't really understand all the nuances that are needed to appreciate a company like this one.
Having you as, a a community member that has a background as an analyst, and I think that's really important, given your perspective on the research that you're doing. Because as you said, you've seen both sides, right? You've seen how the institutions look at these names, and as you've said, you've been involved since the beginning with Palantir, which I think makes your voice very valuable as among the others that were there towards the beginning. And having that full context as we move forward in the Palantir story, and as you're saying, seeing things develop, how fast it's moving, how the story has shifted from government
Mhm.
to commercial, from foundry to AIP. And what I really want to get started with is talking about 2024 for Palantir, and specifically from a stock perspective. So, just for reference to everyone, Palantir in 2023 had a 150% gain. We had that really low bottom towards the end of 2022, where the stock had melted down the entire year and then bounced back significantly. And I believe around May or so was the AIP announcement, and Palantir was really buoyed by how well Nvidia was doing, the AI boom, and all of that, which led to 150% gain from the year, almost complete recovery from what it had lost in the prior year and a half or so. And what I'm really thinking at this point, we're into 2024, a few months at this point. The stock's already up 40%. That came pretty early on with how earnings went and how strong that was. And of course, profitability was no longer a question mark at this point. It's a reality. And there are arguments about, the interest contributing to that and so on. But I think people have finally gotten the message that Palantir is no longer, an unprofitable growth story, and the growth has started to come back a bit. So all of that leads me to believe that there are more eyes on Palantir than there ever really have been before, which I think is a good thing. And also, in the context of the stock market, something to be a bit concerned about, considering, could this be a top for Palantir? And to be clear, just to put my opinion up front, I think everything that the stock has at this point is justified, but I wouldn't be surprised we see for 2024 the stock finishing between $20 and $30. I don't think 2024 is going to be another explosive year like 2023. That's just where I'm coming with from my perspective on the stock. I think after 150% gain in the year prior, you usually are going to see some form of consolidation. And so what I'm thinking is 2024 for the full year is going to be much more of a performance year from the actual fundamentals of the company that's going to help to see some consolidation between 20 and $30. So I have a lot more points on that, some reasons that may happen and may not happen, but I'd love to hear what you think about 2024 being less of an explosion that we saw last year and more of a continuation just on the performance side of the fundamentals.
Well, if we have to be completely fair, we need to say that we have already an explosive 2024.
Right.
I wrote an article at the beginning of the year underscoring, well, the story is improving so much and we have so many catalysts that I wouldn't be surprised if, despite the crazy rally we had in 2023, we would keep going higher because we have Titan coming in, potentially, supposedly, but we got it. The NHS was already included, but there could be some potential follow-ups. The S&P 500, the AI wave that is getting bigger and bigger. And, these things like AI could be seen as hype, but as long as that produce real output and there is a feedback loop from companies wanting to deploy AI, use cases emerging, then you have further confirmations that CEOs can't be left behind. So I believe the true weak point in this AI narrative could have been like last year, where it was very early. But once you start having this feedback loop of McKinsey saying, companies, be aware, you need to be invested very heavily in AI or you die. Then you have CEOs actually rushing to deploy AI. You have companies upgrading all their research and development to actually provide some solutions. That will be a mess, but that becomes like a full self-fulfilling prophecy pushed by a strong narrative that creates results and so on. So once you have an environment that is completely dynamic, you need to be aware of multiple dimensions. It's not like analyzing a railroad where in 10 years from now, you would still expect, okay, let's say a 10% growth because of this, just follows the GDP plus or minus a premium. Here, is like you're playing a video game that has multiple layers and the environment keep changing. So what you really need to do is assessing in each moment of time multiple dimensions. We need to understand the dimension of the financials so that we are aware how the business operates. Then we need to understand, okay, compared with what the company is producing right now, how much is that appreciated? And then you need another layer understanding, okay, the environment is actually changing. How are the numbers expected to change given the changing environment? So this is why Palantir is not complicated, but very complicated, because linearity, as we mentioned before, is not what we deal with. We need to understand what are the signs of power so that we can grasp the changing reality in the best possible way. The best things we can do is, in my opinion, doing what we have been doing so far for 10 years. As you mentioned, once you start studying a company, especially like Palantir, you are kind of confused. But the more you study that, the more you start connecting the dots. And what you build is actually compounded knowledge. I think the key reason why retail investors outperform dramatically institutional investors in understanding the strength of this company is because of the work we are trying to do by keep studying the company, keep leveraging everything we know, discuss with other people what what's the reality. Apart from, if we didn't do that, we would be extremely confused and extremely behind. So to get back to the 2024, we need to be aware. 2023 was already crazy. 2024 started okay, and then we had the big explosion. And now we have a big question mark. Will the explosion keep exploding, or there will be like a countdown? Because yes,
Yeah.
the financials are quite rich, but if the environment actually changes by changing the dynamic of the business in a very strong way, what seems expensive right now would be completely seen as extremely cheap, because if you have analysts expecting, let's say, actually, this is a real number, 20% growth for 2024, 20% growth for 2025, 20% growth for 2026, but we have reasonable expectations given our compounded knowledge that these numbers are actually not that high. Then, even if the stock seems expensive given the current fundamentals, then it is not really expensive in reality. But that's why it is truly needed to understand the company, how it operates, how it fits into this changing environment, and what are the key strengths, so that you can have a sense. That's the best thing that we can have to understand, okay, are there enough conditions given our component knowledge to see if this 20% growth actually makes sense? Or maybe this 20% growth is really, really underestimating the strength of the company, which I frankly think it is the case.
Yeah, no, that's super helpful to hear your perspective on that. Regarding, I guess, 2024, the way I'm coming at it from a perspective of consolidation is more so from where we are right now, March 18th forwards. And I'm not saying that we would lose that 40% we've gained so far in the year. I'm just wondering, as you said, it's like, where do we end up at the end of the year? And I love your point about the community and the knowledge that's allowed retail to understand the story far ahead of institutions that have been buying probably in the 20s instead of dollar cost averaging down in the tens, where retail was going against the tide. Before Palantir has now really gone viral and I would say much more mainstream than it was before, and now it's recognized as a pure play AI where previously nobody would really know even had even heard the name perhaps. So yeah, I think the community aspects that you're touching on are really important, where we have software engineers that are really able to comment on the specifics about the abilities of the product. And increasingly so, we even have Palantir employees commenting and posting on X Twitter, which I think is super interesting. There are a few that I really love hearing from. And it's really great to hear, Sankar even has gotten much more active, less so replying and responding to retail investors. He sort of does his own thing, but hearing that voice that wasn't really there before, it is really great and solidifying. As you said, the compounded knowledge is super important, and I think that's going to continue to develop and benefit us all. But for my argument that I think going forward for the next 9 months or so, that Palantir will consolidate, between 20 and 30 is I have a few reasons for that. And I think a lot of the institutions have gotten into, it's just my sense of things, so where they feel comfortable and they're going to want to see further developments before potentially adding significantly to their positions. What would a development look like that would allow them to, significantly increase? And I think that would be when AIP really hits its stride. Right now, we know the boot camps, the start of the sales cycle, but I'm not sure if you have any insight into how long the AIP sales cycle is going to be. I wouldn't imagine it's too much quicker than Foundry, which we've heard is around 6 to 9 months or so. And it's interesting because they do the work up front with the boot camps, which I think may even delay the sales cycle a bit more. And they haven't talked about pricing, and that's certainly not settled yet. So I think the effects, at least on revenues, have certainly been yet to be seen, which I think is a good thing, right? And investors are super excited about the growth from a customer count perspective and the potential, revenues. And I think AIP, that almost makes AIP much more of a 2025 story, is where you start to see that really hitting in a way that's going to explode the numbers on a quarterly basis. And so I'm not sure what you think about that AIP almost getting those numbers and the increasing, conviction and interest from that almost, being a year delayed, I would imagine from what they're doing with the boot camps currently.
Well, since the company doesn't really provide full disclosure on what they do, the best we can do is having a sense from what they say, from what they shared, for instance, on the letters. We know, for instance, that more than 800 bootcamps have been done so far as of aipcon, but as of Q4, that number was around 500. So we are running at above 300 bootcamps per month,
It's
which
crazy.
is completely crazy compared with how it started. And for everything, we need to understand what is the implication of bootcamps and how bootcamps are actually changing over time. And what I see so far is bootcamps are extremely effective to get a customer. And we have seen that in the number of customers rising. But there is also a revenue effect already. I think that is partly due to the high interest for AI, which makes customers less sensitive to the price. They just want to have something that works. But unfortunately, we can't really know too much. What I
Yeah.
would underscore, but in my opinion, is very, very important, is that the revenues from new clients is actually increasing a lot. Now, we see around 20% revenue growth so far, but there is a negative side. The negative side is that the net dollar retention is actually still, let's say, quite low at 110%, meaning that
Yeah.
the existing customers as of last year expanded on average 10%. But on the flip side is that 10% from new customers is actually very high. And if we see not only what is a bootcamp, but the direction of these bootcamps that are getting faster and faster. So more than 300 in 1 month. And they did in this last month. And they did 500 as of Q4. If we just have a sense of this number, it means that Palantir potentially can make more than 3,000 bootcamps in a year. Even without assuming that they will develop an AI bootcamp manager built on AIP, which is completely a bot that automatizes everything or
Yeah.
almost
I
everything.
love that
So,
idea. I love it.
so there is already the potential to make a lot of bootcamps. And I would, I just made a connection before we talked. If we go into the financial numbers as of Q4, we have an intuition. They got 103 deals of at least 1 million. We know that they got almost 50 new clients. And if we know that since they started bootcamps to Q4, they made 500 bootcamps, it means that, okay, let's make it simple, more 250 bootcamps per 1 quarter. So it means that with around 250 bootcamps, they generated 103 deals and they got 50 customers.
Wow.
Once
That's
you
it.
start connecting these informations and you think, wait a second, now the run rate of the bootcamp is 350 bootcamps per month. That starts
Yeah.
becoming a real revenue generator.
It's really like, at this point, can can they show that over multiple quarters, right?
Mhm.
Because it's one thing, it's like, oh, maybe everyone was super excited the first quarter. Are they able to demonstrate this, at an increasing, as you're saying, that the more boot camps they do, are they actually going to convert at that amount? And I hadn't, as you'd said, gone through those numbers and really thought about it, but that is a that's an incredible data point. And just to sort of wrap up my thoughts on the 2024 story is I think what hurt us in 2022 and the growth overall was Europe. Europe growth, which Palantir has really relied on in the past, is non-existent, and U.S. commercial is what's driving everything right now. And so, I think, as I've said, big 2023 to follow, right? And the valuation needs to cool off, in my opinion. But the point against that are, like, let's say they do start the buyback below or around $20, which, let's say Palantir inside knows if these boot camps are really leading to something significant, which in my mind is a little bit of a ways away, but with the numbers you've demonstrated, could be much sooner. And if they start buying shares at or below $20, I think that would make the stock a screaming buy,
Mhm.
given that they've been so cautious since authorizing the buyback to not destroy investors' capital. And we know that historically speaking, companies that buy back stock really do it at the wrong times. And I think Meta had been an instance of that, buying towards the top, and Palantir seems to be taking a much more cautious approach. So a point against my consideration of consolidation would be if we do start to see that buyback one quarter as they add a bit of treasury stock or something like that. And the other thing is the CEO confidence graph that I've seen you share a lot is inflecting upward. So it's not like CEOs and businesses are afraid of spending at this point, and certainly that troughed in 2022. And so I think this really is an interesting moment. And if the stock, doesn't react to increasingly better fundamentals in the next few quarters, I think 2025 could be huge. People don't piece it together, it's going to lead to another explosive moment, assuming things continue the way they're going. It's definitely very interesting times. And of course, we speculate, like, what is the stock going to do? But ultimately, this is a super long-term story. And it's just very interesting seeing the data points continue to develop each quarter.
I'm very aligned with you with the idea. I see that consolidation between 20 and 30, but it really depends on factors that we can't really control, like neither as investors, but neither Palantir as a company, like macro. Let's say something very bad happens to macro, regardless of the numbers Palantir shows, if asset managers want to sell, the stock drops. That's the harsh reality. But I have to say, given the high interest for AI, I believe there are enough conditions now that if Palantir drops for a stupid reason, let's say a 10% drop just because market drops or Nvidia drops, then at this point, I believe there is enough room for conditions to make people happy to buy the dip, very differently from 2022. Because the big problem we faced in 2022 was this sentiment of a growth story that was gradually getting broken and broken and broken. A similar feeling, sentiment, which there is currently on Tesla. Fundamentals, but the perception is Tesla now is a broken story. If it is a broken story, okay, it deserves that. If it is not, that could be a massive opportunity. Palantir was in that spot when it reached the bottom because it was perceived as a broken story, but it was not a broken story. Actually, it was a new story just at the chapter one, ready to be rewritten. And now what I think we need to really think of is how is the story right now of Palantir as a company and Palantir as a company operating in this bigger story of AI. And then we need to use the fundamentals as a check so that we can have a sense. I underscore this: a sense is the best thing we can have, because if we want to be too precise here, we screw up. People who missed Palantir at 6 missed it because they went to numerical. And I personally made a mistake by trimming the position in at around 11, 12, because I was starting thinking too numerically. We need to understand the evolution of the story. Now, if we have a sudden drop, is the story broken? Unless there is something really impactful for Palantir, like Palantir is a massive scam and a virus completely destroys Apollo and all clients are infected. Okay, that would be a serious problem. But if the story keeps evolving in the positive direction, it's like there is always someone who is willing to buy it. So both from a retail side and institutional side. I believe even if this is a qualitative assessment, this is very true and something that helps the stock to have this floor. And then you have also the optionality from the company, as you mentioned, with the buybacks. If karp thinks it is opportune to actually deploy that cash to support the stock, they can do that. And especially in this critical moment, I think karp really wants to preserve the happiness, the stamina of the employees. So that's why also we see karp being that confident. But he knows he has a winning, like a winning horse. He can be cocky because he knows his horse is superior. And when you have a person that is so confident, there are only two choices. He's a scammer. He knows what he's doing.
And we hear an equal amount of both of those comments, at least on my videos. I getting an increasing amount of a newer audience, and I think that's contributed because of how well Palantir's been doing. You have some new investors coming in. It's always interesting to read a new retail investor comments. You have him praising him as the next Steve Jobs, and of course, a complete scam. Like, we don't even understand what they're doing. What is he talking about? That sort of thing. So let's wrap up this discussion on 2024. I really loved everything you were saying. I would love to, dive into every point that you just made, but let's actually take this and build off of it into what comes after AIP. I want to talk about product wise, leadership wise, like, is leadership going anywhere? And as you've alluded to, cash wise, are they going to be doing buybacks, dividends, reinvesting, acquiring? What are they going to be doing? So thanks everyone for watching. We will be back with this discussion tomorrow.